To fight inflation, the U.S. Central Bank raises its benchmark interest rate by another quarter of a percentage point despite the banking crisis. The ninth consecutive rate hike further widens the gap with that of South Korea ahead of its monetary policy decision in the coming weeks. The nation's finance chief says the Fed's smaller rate hike this time has somewhat eased concerns. Soo-jin explains.
The Fed's most recent decision on interest rates has somewhat mitigated the Bank of Korea's concerns. That's according to Finance Minister Choo Kyung-ho during Thursday's emergency economic meeting attended by other financial officials, including the governor of the Bank of Korea, Rhee Chang-yong. The Bank of Korea can rest somewhat more easily as the U.S. Central Bank has pushed its benchmark interest rate up by 0.25 percentage points. On the back of the FOMC decision, the BOK may once again keep the key interest rate at the current level of 3.5% as it continues to monitor the economic landscape. Adding to this view is the consumer price index growth falling to the 4% range in February for the first time in 10 months. The Fed, however, may continue to push rates higher if needed. The hike of 25 basis points brought the benchmark rate to the 4.75% to 5% range, leaving some concerns about the 1.25 to 1.5 percentage point gap in key interest rates between South Korea and the U.S. The 1.5 percentage point gap is the highest since October 2000. And that gap will widen to 1.75 percentage points if the Fed decides to hike interest rates by only 25 basis points in May and the BOK decides to once again keep interest rates unchanged at its next policy meeting in April. There are also still concerns regarding the global economy, even though the domestic financial market remains stable as a whole.
As we cannot completely rule out the possibilities of instability in the global financial market and a greater uncertainty in the real economy during the process of adjusting to a tight monetary policy environment, we will continue to closely and carefully monitor the current situation.
The BOK may also have no choice but to consider raising rates if the Korean won falls below the psychological threshold of 1,300 won against the US dollar once again, which pushes up the prices of imported goods. The chances of the won-dollar exchange rate rising are low, however, according to an expert.
The exchange rate fell today, signaling that there is a consensus that the Fed won't hike interest rates as it did in the past. There is little chance of the exchange rate rising in the future.
Soo-jin, Arirang News.